Everyone, earlier today, our own John Steinberg spoke to Goldman Sachs President and COO David Solomon at the Milken Global Conference in LA, where they talked about the evolving technology of the banking industry. Check it out.
I'm joined now by David Solomon, President and Co-Chief Operating Officer at Goldman Sachs. Honored to have you here today.
Great to be here. Thanks for having me.
Let's get into the disruption that sits at sort of the intersection of technology and finance, which seems like a lot of what this conference is about. You've got your efforts with GS Bank and Marcus. SoFi is a sponsor here. We continue to hear about Bitcoin and whatnot. How do you think about focusing at the bank on that right now?
Well, technology disruption in business is certainly happening everywhere. You've asked specific to finance, and I'll talk about finance and how it's affecting us at Goldman Sachs, but this is affecting everyone's business everywhere. So you start from a place that technology is changing the way we connect, distribute, produce in very, very significant ways, all the services that we provide and all the businesses that we're in. And so when you think about finance, it's having that effect in finance for sure. From a finance perspective, I think the disruptions come in all different ways in the business. For us at Goldman Sachs, we're thinking about the ways we can have the best technology possible to really put our people in a position to be increasingly effective for our clients. So you think about our business, client business, but most of what we do for our clients is delivered by people.
Right.
And our job here with technology is to ensure that it gives our people the tools, the capabilities, the ability to do better, faster, stronger, more innovative for our clients.
Right.
And if we can lever our people who are all really high content people, if we can give them better tools, we're going to have a more effective client business. And so that's a hugely important part of the way we think about technology. Now you mentioned Marcus,
yes,
which is our first entry into a consumer-based business. That's different. That's a tool that actually allows us, because we don't have the embedded infrastructure of so many of our competitors, to go compete in a new segment of the market that traditionally Goldman Sachs hasn't competed in before.
And your most cutting edge financial effort is geared at millennials. Marcus is a loan platform for young people. Is that fair or no?
I think it's fair. I think it's fair to say that it's geared to anyone. Okay. Look, I think it's fair to say, and I look at my kids who are in their 20s, they don't bank the way I used to bank.
Right, exactly.
And there's no question that millennials adapt to the kinds of services we're offering on Marcus on an app in a different way. But you know what? We're also finding that people that are my generation, are also using their phone to basically deal with their financial needs. And so as we're building out Marcus and we're looking at the demographics of people we're connecting with, it's much broader than just millennials. It's an offering that we think can offer a very compelling value proposition for people from a finance perspective. And we know that if we don't make it very valuable to a broad cross-section of the population, we won't succeed.
Let's talk about young people for a moment.
Sure.
How is it changing? How are the way you operating the bank changing with a whole entire new generation of workers coming in? And let me put it in a little bit of context that I think is interesting. You guys have been a very active private investor. You've invested in Uber. You've invested in media companies like Tastemade. Some of you took Twitter public. I remember I was close with Noto at the time that was all happening. How much of the culture of Silicon Valley has gotten into Goldman Sachs at this point? And when you're making these investments, how active are you in trying to pull those cultural insights into your company?
Well, what I'd say about the culture of Goldman Sachs is Goldman Sachs has been around for 150 years, and one of the things that I think has really differentiated Goldman Sachs is it has a very strong culture. And I think this is important for all businesses. As you build businesses, culture matters in businesses, and Goldman Sachs has had a very strong culture. I think the things that define Goldman Sachs culture that I would point to that I think are relevant to this conversation is it's always been a culture of innovation. It's always been a culture of excellence. It's always been a culture of team orientation, trying to take the best people, put them together, and have them do something that's very differentiated.
Yes.
So that obviously translates very well to Silicon Valley, where people are trying to innovate, disrupt, and change. And if you look at the history of Goldman Sachs, we've been extremely innovative around finance and around technology in finance. And so, all of that fits very, very well. When you tie it to your question about young people, I think in all businesses, the world's changing, there's a lot more transparency, and the way you deal with employees, the way you deal with your teammates, the people that work with you, the way you invest in their careers, the way you give them opportunities to grow, the way you give them opportunities to learn, it's changed enormously versus when I started 34 years ago in the business. When I started 34 years ago, there was no transparency, it was a lot harder to move, it was a lot harder to understand what was going on around you. Now obviously it's a very competitive world, and if you don't have a culture of innovation that's attractive to people, where they can learn, where they can grow, where they can develop, it's very, very hard to have high quality human capital. And for Goldman Sachs, that's paramount. So we're spending a tremendous amount of time focusing on that.
It would seem it would be more challenging for you than a traditional startup because there's so much more at risk. You're a regulated institution. There are billions of dollars on the line. You're dealing with highly confidential stuff. How do you bring entrepreneurship into that while keeping the ship safe at the same time?
Look, I think it's
because with a command and control culture in the old days, it was very easy. Now you want entrepreneurship, but you don't want to run the place off the rails.
Well, you don't want to run the place off the rails, but I think entrepreneurship can exist in a big organization, and I think big organizations need some kind of command and control. I think the thing that's interesting is that there are advantages to big organizations that young entrepreneurial companies can't provide. Okay, and it's all a balance, and I'm not suggesting that one's better than the other, but they're just different. For example, you can have a very entrepreneurial culture inside Goldman Sachs, but at the same point, you also provide a whole bunch of infrastructure that can really benefit you. So you go to work for a small company, you don't have the same kind of mentorship and development, investment in ongoing education. You don't have the same opportunities to necessarily see and meet people on a much broader spectrum, much more diverse spectrum. So there are balances in all of this, but to attract high quality human capital in the competitive world that we live in, whether you're at a small startup or at a big organization, there has to be entrepreneurialism, and there has to be a real investment in people, their careers, their development. And we spend a lot of time on that because we think it's very important.
And on the advantages of what a big institution can provide, a lot of these fintech startups are running with relatively thin technology, and many of their back ends are with larger banks. And if you talk to some of the most sophisticated investors in the space, they believe that they have to be acquired, that they will get to a certain point. Do you view that as a way? I mean, Google has historically done an enormous amount of M&A to bring in. Amazon has done relatively less. Where does Goldman fall on that? Will you be doing fintech acquisitions?
We do. We have, and I think we will. We have investments in lots of businesses. But if you look at our asset management business, we've made probably 15 acquisitions in our asset management business in the past couple of years. A lot of them are small, but a couple of them are tech based in the context of what they deliver. So we look at that stuff, we think about that stuff. We've also been a great developer of platforms, but we're open to finding platforms that we can buy, build, or create, and we evaluate that all the time. I do think that one of the advantages that we have when you look at Marcus is that we have an enormous ability to build great state-of-the-art technology. We're really, really good at that. We have capital and funding, which when you think about a bunch of these fintech businesses, that's a real advantage. And we don't have the legacy infrastructure. So when you look at the big bank competitors, they have those things too, funding and ability to build good technology, but they've got a lot of legacy capital and infrastructure. When you look at the upstart competitors, they do some very cool things with technology, but they don't have funding, and they don't have the same capital behind them.
Right, and in many cases, they're paying higher costs for the back end because they don't have any of the capital themselves.
So I think we're in a very interesting place there to potentially be disruptive, and that's why we're so excited about Marcus as a platform. We're obviously starting it with unsecured, loans, but you can think about that as a platform to sell other products, or also branch out into other parts of the wealth management business. And it's a very, very interesting platform for us. Very excited about the growth that, if we execute right over time, that it may provide us with.
David, I'll leave you with one sort of macro question. I was on a finance panel with other finance journalists, and they had discussed, is it the end of stock buying? Are we at the end of stock buying because the macro has so dramatically outshifted any particular company-specific factors? Your last quarter, trading was down 6%. Is that a structural change, or is that just the normal ebb and flow that goes on in the trading business?
With respect to our quarter, it was the normal ebb and flow that goes on with the business and our business mix. To your broader point, I don't agree with the comment that trading's going away. There's no question there's a huge secular trend toward passive management, more machine-based asset management. However, there are a bunch of things that are going on that aren't permanent that are contributing to that. massive monetary policy, low rates,
yes,
very little dispersion in the market. We're in a very growthy cycle. If you go back and you look over the last 20 years, periods where active management has really excelled have tended not to be the growthy periods, but rather the value periods. Okay,
yes, got it.
There definitely are secular trends in this direction, but at the same point, I don't believe, there's no absolute, and I think there'll be lots of opportunity for successful active management, successful stock picking, and all of that I think will ebb and flow over time.
David Solomon, Goldman Sachs, wonderful to have you here. Please visit us on the floor of the stock exchange.
I'd be delighted.
Okay, thank you for joining us.
Nice to see you again.
Okay,
thanks so much for having me.
Back to you guys. Thank you so much.
All right, that was our own John Steinberg speaking with Goldman Sachs President and COO David Solomon.
Great interview there from Milken in LA. Before we get to our next